Thank you for downloading this RealAgriculture podcast. Excite your crops with inputs from Excite Bio. Access nitrogen and phosphorus with Excite Bio's lineup of inoculants and ag biologicals. Since 2010, they've been helping farmers harness the power of the soil. Learn more at excitebio.ca. That's XITEBIO.ca.
So let's talk markets with Brian Voth of Intellifarm. Brian, it's great to chat with you again.
Thanks, Shaun. How are you?
Okay, last week we talked a little bit about our Canadian Farmer Sentiment Index and the results, and we have a market component of that index. And one of the most volatile components of the index is always which direction is the market headed. Now, it happened in mid-October when we did the study that farmers were feeling a little bit more bullish. It was, I think, a 121 out of 200. So what did you make of that? Because I know you watched that video and read some of that report.
Yeah, I found it kind of interesting because immediately when I saw some of those numbers as it pertains to the marketing side, that it immediately reminded me of that old saying that everything is always the most bullish at the top and bearish at the bottom. And, you know, with marketing and commodity prices being such a big concern. And then also the second part of that was looking at the forward-looking part. Like, not a whole lot of optimism when it came to commodity prices going forward. And it immediately reminded me of this, is that, are we at this stage now where everybody's most bearish at the bottom? And, you know, you and I have talked for the last number of years, and you've known how negative I've been for the last probably about 2.5 years now. Bearish Brian has left the building.
Oh, breaking news, everybody. Whoa. Okay, now I'm fascinated.
You might have to retire the grizzly bear label now, I guess. I don't know. But
Brian Voth, the great market bear. Have you totally, okay, so not being like a growly bear is one thing. Are you like, are you like a calf, like you're neutral, or are you turning into that bull?
No, it's more, I suspect, and we can talk about this more, but I think we are setting ourselves up into a sideways market for the next while. And I think we have found our floor price. The one asterisk I put on that one is soybeans. But I'm cautiously optimistic is how I've been telling clients that we have actually found our new long-term low or our new long-term floor price.
Okay. So when you look at December corn at a 428, roughly, with all of the bad news that's been circulating and, you know, the talk, I had people on here talking about a low 3 handle on corn. Might have been you.
I'm curious what those same people were saying 18 months ago.
Well, the fact that we're still at 420, around 4.25, is I keep on looking at it as, boy, we've held pretty well considering how much, you know, bad news has been circulating that market.
I agree, and again, I'm going back to I'm pretty sure it was last spring or early 2023 when corn was still at a 5 something handle on it, and I said my downside objective on corn was 390 a bushel, and it looked absolutely ridiculous to say that. And actually, even that didn't hold. Like I think on the nearby chart, we hit like 363, something like that. Right. And then we bounced up from there. But 390 was the old highs from 2014 to 2020, like give or take. I mean, there's a few highs, or there were a few higher highs in there. But for the most part, 390 was a tough resistance level. And going on this old idea that old highs become new lows, that's what I was basing on that, along with the fact there's some technical signals showing signs down to those levels. So when we hit 390, on the one hand, I felt vindicated. On the other hand, it kind of sucks because I knew what it meant to be right at the same time. So I'm cautiously optimistic that this 390, I mean, like I said, we did drop a little bit lower than that, but 390-ish on the bottom end will hold on corn. But don't get me wrong, not being bearish is not the same as being bullish.
No, I get that. And I love chatting with you, Brian, because you just lay it on the table. Like you're an open book and you're comfortable enough in your own skin. Here's what I believe at this time, and you say it. And once in a while, there's analysts that, don't really want to say how they feel, right? So I'm curious, if you, knowing today, like if you were to go back in time and think about it 12 months ago or some period in the past, and you think to old Brian, what would current Brian say to past Brian in terms of what you might have missed at that time during your analysis, or what changed?
In reality, we should have been more aggressive on sales, but the problem is the opportunities to sell at those higher levels were also still during the growing season. And so you've got to manage the price risk with the production risk. Unless if you're going down the futures and options road, and that's fine, you can do that too. But without that, if you're just talking about cash marketing, you can only realistically go so far and take on that much production risk by selling grain. Since basically spring of 2022, everything should have been sold for the foreseeable future in the spring of 2022. Really.
Yeah.
But again, is that realistic? No, it's not. So there's this theoretical world that you can live in and say, well, this is theoretically what you should do and everything like that. But we live in a realistic world where that's not necessarily feasible.
What's your thoughts on farmers saying, the other metric we have is confidence in your marketing plan. So your ability, no matter if you think the market's going up or it's going down, what's your confidence level in your ability to manage your risk or, make the sales or not at the time? We're about a 91. We're a little bit up from July, which was, I think, about an 83. We've kind of been sort of sideways trading here as we've seen the outlook on the markets really bounce all over the place. Confidence is somewhat stable, although slightly negative. I always say, like, I am sympathetic to farmers at this time with, how much uncertainty there is out there, but I don't think a 91 is that bad. What are your thoughts?
No, I don't either, because I mean, there's being confident, and then there's being overly confident and having no clue what you're actually doing, I guess. And
right.
Then knowing what you're doing but not being confident about it. So I think to be in between there somewhere is maybe not the worst thing. But also just, I guess, leaving room for that. What if I'm wrong about my thoughts on things?
Right.
And again, in a realistic world, that's why we incremental sell, because things can and always do change. And right now, I feel like we're more in a political environment, or getting into one potentially, and that becomes very challenging because fundamentals can take a back seat at that point.
Well, I'll give one to you. I'll give a scenario to you. We get to March and hits Bloomberg and hits Reuters and all the news services that there's a ceasefire between Russia and Ukraine. That would be a negative from a market perspective, or how does the market read? Like that's an example of a news piece that could happen, or it could be, there is zero chance this is ending, which is kind of the status quo. But there could be some sort of a big flip like that where, okay, big news hits the market, and the market's got to chew on it and deal with it. But that's one example, right?
Yeah, and like that one, given how long this has gone on, there would likely be some knee-jerk headline reaction to that. And it would be one thing if, wheat prices, corn prices were still up at multi-year highs. Then the risk would absolutely be weighted to the downside. At this point, given that everybody's kind of figured out how to move on and whatnot, and the world hasn't stopped turning, Russia's still growing wheat and shipping it out, and regardless of whatever sanctions and restrictions there are. Ukrainian farmers are still growing crops. Yes, it's not as much as it used to be, and it'll take a long time to, demine fields and get all that stuff back into production. Long term, yeah, it should be a negative thing. But again, the market has moved on, and where the prices right now say that this is not an issue.
So what's a geopolitical factor that moves the market?
A tariff war between China and the U.S. would be one.
That seems likely, doesn't it?
Well, I mean, they're politicians, so I take everything with a lot of salt. But
fair enough.
it's the most realistic one. And I say, that's why I said right at the beginning, I'm putting an asterisk beside whether soybeans have found their floor price or not, because they're the ones that the soybean prices are the ones that are most susceptible to a downside correction, especially when you look at the fact that the balance sheet is like more than adequate. Yes, it's a little tighter after the report on Friday than what it was, but when you look historically, the ending stocks numbers in the U.S., which by the way are accounting for, I think it was like a 6% increase in soybean exports year over year already, the balance sheet is well padded. And so if a tariff war were to start, China could very quickly do this to the U.S. again, just like we saw in 2018.
Yeah. Tariffs on Canadian canola. Well, this is a week where Minister Macaulay is supposedly in China. Are you expecting tariffs on Canadian canola going into China?
Sorry. Just got a phone call there. Am I expecting tariffs? I don't. This one is really weird to me because, like, people have been talking about this for months, and yet there is nothing official out there at all, aside from China launching this inquiry. And I look at this and I say, I mean, on the one hand, the canola balance sheet is tightening up. There's no way that Stats Canada isn't going to lower production numbers in 3 weeks when they come out with that. So that's a bullish factor compared to what we see today. Whether or not China buys it or not, or does put tariffs on or anything like that, I'll say this. If China puts tariffs onto Canadian canola, they weren't going to buy it in the first place. Because if they do it, they don't need the product.
Right.
And in 2018, with the tariff war between U.S. and China, it was the exact same scenario. That was the same time that they were culling hog herds with ASF and everything. So their demand for soybeans and soybean products was plummeting. They were in the perfect position to go toe-to-toe with Trump on tariffs because they didn't need to buy the product.
Yeah. The other commodity that's very susceptible to a U.S.-China trade war is, and I'm not going to ask you to comment on the cotton market, but it is cotton is definitely one of the commodities that I've learned over the course of this year, talking to different analysts that focus on cotton, is heavily exposed because of how much cotton is the U.S. cotton market is reliant on the Chinese market. So, hey, Brian, this has been fantastic. I really appreciate it. Love every time you come on. It is so awesome to hear as we get a little bit closer to winter. This is typically when bears go into hibernation. So it's nice that you have done that with your own soul and you have moved over to a little bit of a kind of a neutral, you're sideways trade kind of a guy. I like this. I like sideways trade Brian better than bearish Brian.
Well, I mean, sideways after the last 2.5 years might look bullish. I don't know, but yeah, well, it's all perspective, right?
There is that. Well, hey, Brian, thanks a lot for joining us here today on RealAg Radio.
Thanks again, Shaun.